How are we all doing? Morning, Reverend. Morning, Danny. Morning, CK. Morning, Virginia. How are we all doing? And welcome to Plowman, who's just joined as a member, apparently. Plowman? Plowman. How you doing? How is everybody? All good? It's Friday. It's non-farm payroll day. It's always a busy one. Be a quiet morning, but it'll be a busy afternoon. So that's coming up this afternoon. We'll have a look at that in a minute. Markets have just opened. The FTSE is broken long. DAX is also trying to go long. However, there was no pre-market range today. It was too tight. So I'll be taking the 5-minute ORB today on that one. But we are hitting these all-time highs. So DAX again yesterday, all-time high. We've put in an all-time high every day for the last 5 days. So we literally, you can see yesterday's high is there. So we are hitting yesterday's high now. If we pop yesterday's high, we should look to get another sort of equal move out the highs. Obviously we had a big one there, but we'll see what happens. But yeah, this DAX absolutely not stopping at the moment. So yeah, very big moves. So yesterday, nice profit on these two yesterday. One hedge, one profit. No, actually, no. I got out at break even on the FTSE, made a profit on the DAX. Both US indices yesterday afternoon hedged, unfortunately. Couldn't do anything with yesterday's price action on the NASDAQ and the Dow. Dow did eventually break down, but the open was just whippy. So hedged on both of those yesterday, unfortunately. So yesterday was an overall loss. Not much, only a little bit. But we will see where we go. We've got 1.5 minutes until the 5-minute opening range is in. So we'll start off with the news this morning. Where is everybody? Why is there only 20 people in here? Where is everybody this morning? It's obviously bad weather. It's raining. No one's going to work. So yeah, Friday, obviously today. Yesterday we had unemployment claims came out negative on the US. So unemployment claims went up, which is bad. Didn't really get much reaction to it. Main mover at the moment seems to be the Australian dollar, which we'll look at in a second. So today, obviously, non-farm payroll day. 130 is the unemployment rate for the Canadian dollar and the unemployment rate for the US. So these are the things that are moving the market today, not the non-farm payroll. So this is the important thing that the markets watch. We're forecast to stay the same for unemployment rate. Bear in mind the claims went up, so there is a possibility of getting a tick up on that. 6.6, we're expecting the Canadian to rise, which is going to be negative. So based on that, the ADP was down. Jolt's job openings were up, which means quite often that there's a little bit more unemployment. So there is a possibility this afternoon, I think, for both of these to come out slightly higher than forecast or as forecast for the CAD, which will be negative both CAD and US. So this afternoon, just be aware, we may get a little bit of a drop in the CAD and the US, but wait and see what the figures are. Non-farm employment obviously is forecast to be going up. So that's it. So that's your news coming up this afternoon at 1:30. That's an hour before the market opens. So be wary of the opens today on the New York side, because you could well have very big moves already in. So things like the Dow, you could well find, this sort of movement already put in on the Dow before the market opens. If it's done an ADR move or something like that before the open, it usually has quite a quiet open. So just be aware. Quite often, if there's a very large move pre-market, I won't trade the open because the open tends to be very whippy. But we'll see what happens. Obviously, we'll know that at 1:30. So there's your 5-minute ORB on the DAX. So there's the opening range. So just waiting for a breakout, long or short. It looks like they're rejecting yesterday's high at the moment. FTSE also struggling. FTSE yesterday did manage to double top, but didn't break. So again, a lot of upside resistance at the moment. These markets are exhausted. They're finding it very hard to make progress. they are making progress, but it's a bit of a grind. Morning, Peter. Morning, Neo. So we'll see where we go on the break on the DAX. Come back to that in a minute. Overnight news, not a lot. Not a lot at all, really. German industrial production came out as a -1. Nothing but negative news for the euro at the moment. The euro's just getting bad news after bad news after bad news. Production lower than forecast. You know, it's all just bad news for the euro at the minute. So nothing but down for euro. Kazakh said something there, I saw. I know it's Kazakhstan. South Korean Special Forces Commander, no second martial law planned. Right, okay. So yeah, as you can see, nothing much else overnight. All very, very quiet. Macron obviously is going to announce a new Prime Minister because it's all going wrong in France as well. Eurozone at the moment is just a mess. So Pound New Zealand 125 weekly. We'll have a look at that in a sec. So yeah, you can see the euros at the moment having a little bit of a that's the Australian dollar being weak, but a little bit of a sort of downward slant on it at the minute, the euro. New Zealand and the Aussie are both weak at the minute, but yeah, everything's kind of gradually grinding down on the euro, but yeah, can't see anything but that for the near future on it, unfortunately. Right. Let's have a look at ADRs. So Pound New Zealand is your ADR this morning. Again, massive moves up there. So the Australian dollar, we had that Australian dollar news this week with the GDP numbers coming out lower than forecast, although it is still a tick up. GDP is still increasing, therefore it is bullish. However, it's not as bullish as they thought. So we're getting quite a bit of downward momentum at the moment on the Aussie. So big collapse there, you can see. It's just not stopping at the moment, this Aussie. Very, very weak movement. New Zealand dollar also suffering off the back of that as well. A little bit of a downward move on the New Zealand, as you can see. So nothing particularly good going on there at the moment for the last couple of days, but it will probably undo itself because, as I said, it's not really negative news. The GDP figure did go up, which is positive. It's just not quite as good as they're anticipating, so they're scaling out some of their longs. So Pound New Zealand, again, ADR hit this morning on that one. We've broken out that high of the month. So we looked at this level as being a potential resistance, screamed straight through it this morning. So in pushing up into propulsion at the moment, which is that reversal and high of the previous month. So good looking short opportunity here. I'll be taking this short. No, I won't, because I can't trade Pound New Zealand because of the swaps, but I would take that short if it wasn't expensive to trade as a short up there. So big strong push, accumulation, big strong push, short, and look for it to pull back into this area here. That is also weekly range, so it's 125 of your weekly range. Where are we? Thursday, Wednesday, Tuesday, Monday. So that is 125% of your normal weekly range, also putting on that. The pound odd has done exactly the same thing. Yeah, so again, this one's coming up to a lovely level. You see the pound odd. Yeah, this is why I say trade the pound odd or the New Zealand. Don't trade both. Yeah. This looks identical to what I've just gone through with the Pound New Zealand, isn't it? It's the same pair, basically, yeah? So just trade one or the other because it's pretty much the same instrument. So you can take your pick of either of those. They're both coming up to monthly resistances. There's a few other weekly range hits as well. New Zealand dollar Swiss has done its weekly range to the downside. That's coming down into monthly lows as well. Another nice looking level there. If that continues to push down and stays down today, might well get an entry on that New Zealand Swiss long. Where's the swaps gone? It's not ticking. Tick. It's frozen. There we go. So swap long 310. So I will take that today. Quite like the look of that. Let's have a look. So if we do break out this monthly low, as you can see, we're range bound here. We've been range bound now for 1, 2, 3, 4, 5, 6, 7, 8 weeks. We had a little bit of price discovery outside, and then we were back there for another 3 weeks before, a little bit of price discovery, sat around in there for another 4 weeks. So this is the area of balance at the moment. So assume that we stay in the same area of balance until we break out. If we break out, we're coming back down into these lows, which is going to be about 5 ADR. So depends how it comes down, if it comes down like that or whether it comes down parabolic. But this is the intervention from the Japanese yen. So this type of price action is rare. It's more likely you'll see that type of movement. So good looking opportunity for a long on New Zealand dollar Swiss. What else have we got? Euro New Zealand, again, it's all Aussie New Zealand based. Euro New Zealand hit to the upside. That's a weekly range hit. Yeah, we're approaching ADR on that at a weekly high. So another potential double top weekly there, that area there. So this New Zealand and Aussie really getting hammered at the moment. Euro odd will be the same as the Euro New Zealand. It's obviously pushed out a bit further. I've already got shorts on this one, so I'll be taking the 4th position on Euro odd today. So propulsion gap is filled. So this is an area of previous support. Turn resistance. So right here is a good short opportunity, looking for it to push back down into this area. So next entry that I'm going to get into here will bring the average up, giving me an exit down here. It's going to be tight for an entry, that one, because I need it to close above the area. I'm going to watch that this morning. I'm just going to set a little alert there. Just to remind me, I just want to watch the price action here because I might take a manual if it doesn't get in with the EA. And Aussie dollar Swiss. Morning, Gregors. I think I said that already. Not sure. Double morning if I did. 2 longs on that at the moment. Just waiting for a push on the Aussie dollar Swiss, but that is an ADR extension to the downside. Sorry, an AWR extension to the downside. That's your weekly range done. Potentially looking like a reversal coming in. Just taking a second position on that one today. Looking for a push back up into this area here. So there you go. There's your weeklies and your ADRs. DAX broken short. No real volume today. As I said, it's non-farm payroll day, so quite often you get a lot of choppy price action in the mornings because the market doesn't want to put a lot of orders in until it knows what the US dollar is doing. So we will see. It might take off, but might be a tricky morning today. So long the FTSE and short the DAX. We'll see where we go. Right, so those are your ADRs and AWRs. The RSIs, we've got mainly the same thing as I've just been through. So it's the Euro odd. Obviously, as we know, that's really extended. So we've got an hourly RSI extension embedded there. So that's pretty good divergence. We've got flat market making new highs. So that's bearish divergence. The whole thing is flat, bearish divergence. So for the last 2 days. And 4-hour RSI extension is above the 80 level now. So this is getting to the point for very, very nice sell opportunities. Yeah, so typically we get nice moves off of 80s. So yeah, good looking opportunity for a pullback down into that area there. 4-hour RSI extension. So just wait for some bearish price action. I'm already in that one though, so I will be taking another short. And we've also got, as an hourly RSI extension, Euro New Zealand, pound odd, also extended on the 4-hour. That's coming up to that area of resistance. So that's a good looking short. I can only take longs on this one due to the cost, unfortunately. So, but yeah, good looking short opportunity there. Push back down into that propulsion area there. So it's either going to stay in that range or it's going to attempt to break out of that range. odd Swiss. Long on that with 2. That has just broken out. So next entry for me is going to be down at ADR today if it breaks down. That's nicely extended to the downside as well. So just looking for a pop back up on that one. Target to the upside, I haven't really put one in. Original target was up here. New target I will put in will be at the highs there. So watching, so there's multiple areas potentially for upside resistance. That one is definitely a previous support term resistance. So I'll look for a double top off of that. There we go. So that's those all done. Morning Monkey Man. Right. So those are your breakouts, and those are the movements today. Didn't manage to bank anything yesterday. Sitting in 3.5%. Main thing at the moment is the euro odd. So this thing's just not stopped since I got into it. Just continuing for the last couple of weeks. So looking for a pullback down. Average is a bit tricky on this one at the moment. It's the only problem I've got really, 175 ADR, but that's only because we've pushed up today. So when we opened today, I was 150, so just about an ADR, about 125 ADR away. Obviously because we pushed up, it's looking a bit further now, but so just looking for this next entry on that one, bring the average up, then you just need a down day basically down into here. So that is your potential area of resistance turn support if we turn into a range basically. So that's where I will hopefully be able to get out, but I don't think the average is going to get up there unfortunately, so I will look at that one next week. Oh, what did I just do there? Let's move that down there. Yeah, so nothing banked. Everything else is kind of okay at the moment. It's just the euro odd. Aussie US at the moment. Can't really get any movement on this one. I've got one extra position on that I shouldn't have on because I took an accidental pending with my new buttons. So yeah, so it's that trade there is not really on, shouldn't really be on. So looking for a push back up on this one. Obviously this is just this Aussie dollar weakness that we've had off the back of the GDP numbers, but as I said, this could be back up here this afternoon, obviously with the US. So if we get weak US numbers today, which potentially is on the cards, unemployment to go up, it's forecast to go up in Canada, so it could well get dragged up in the US as well, but we'll see. If we get negative numbers, we'll be back up above ADR today, and all this will be down there, but just waiting basically for some news. Right, so that's really all I've got for you today. There's nothing particularly else to cover. If there's any other pairs you want to look at, let me know. For the members, progress on the new EA yesterday was slow. Just close that out and get rid of that. I spent ages yesterday recoding the EA for those that are in the members room. If you remember, we said it'd be better if it worked on ADR, so I've adjusted it. So the zone height and distance is now working as ADR. Yeah. Took me a while to recode all that. I had to uncode everything I'd done and recode everything. So that kind of took up yesterday afternoon. So I didn't manage to get anything else I wanted to get done in the EA done. But basically what happens now is when you hit the buttons, it places the boxes a ADR or whatever distance you've set. What did I set? Yeah, half an ADR, and the box height is a quarter of an ADR. So ADR on this is 477. So the box is placed half an ADR away, and the size of the box is a quarter of an ADR. Yeah, so I've just basically changed it so that it does that. So that's what I spent all yesterday afternoon on. So today I'm going to put the swap algorithm in, basically to display the swap costs. And then it's pretty much done. So I need to code the MT5 version, and then I will hopefully be able to get it out. But I haven't done any forward testing with it yet. This is what this account is set up for, to do forward testing, but I haven't had a chance yet to do any. So what I might do is actually I might run through and just set up today some zones and just see if it trades. But what I want to do is see how it reacts over 24, 48 hours, because I want to see and make sure that the boxes stay in place. Obviously in the back tester it works absolutely fine, but I want to test it real world before I push it out, because obviously it needs to work. So that's what forward testing is all about. But yeah, it's all working as I want it at the moment. So anyway, I'll update you on that. The other strategies we've got running, the lazy trader strategy. God, that's getting into trouble. Look, Euro New Zealand. What's that in? 1.1. It's not a lot. So we got some drawdown at the moment on the lazy trader strategy. It's doing well. It's continuously banking. So we banked some more yesterday. It's banking every day, which is nice, which is what it's designed to do. Obviously, it will manage the drawdown when it gets to the levels it needs to do drawdown control at, which it hasn't yet. Euro pound is getting close to needing drawdown control. So banked a little bit on that this morning, but we need it up here. So ADR is what? It's not the right ADR, is it? Because it's using the 4 hour. What's ADR on the Euro pound? It's about 30 odd, isn't it? It's nothing. 37. So whoops. Looking for a 37 pip move. That's 15. So if we get any kind of, even if we get 3/4 of an ADR bull movement today on this, it's out. So not really worried about that particularly. Euro New Zealand is getting a little deep, but yeah, everything else is okay. So we've got 1, 2, 3, 4 trades it should probably bank today. 2, 3, another 3 that it's got easy. So basically the news today will either cause this to do DD control overnight, or it will bank it all. So we'll see what happens with the news. The pullback strategy, banked a little bit yesterday. Banked a little bit today. Tiny loss yesterday. Sitting in $1,000. So we're sitting in nearly 5% of profit at the moment. Again, the news today will move the yen and the Swiss when the non-farm figures come out. So the TP on this is 2.8. We've done 1,600 drawdowns. So we're just waiting for one news event to drive all of these to TPs. Just haven't had a good trend or any decent news in the last 2 weeks since I started doing this. So it's just annoying that the forward testing is just at totally the wrong time, where we're not getting any movement, as you can see. Yeah, you can't make money with a trend strategy when it does that. This is a trend strategy. So anyway, but we'll update on that next week. And I'm going to give both of these the month of December to run through. And at the moment, it looks like they're just doing exactly what they say on the tin. So will be good to use, and I will use them. So looking good. Have you noticed any difference in profitability as you started taking swap positive trades only? A bit early to tell, because I've only started it really in the last few weeks. But yeah, I mean, I don't know. I've noticed a massive difference in the cost of doing business. Look at my, this is this month's P&L at the moment, but look at my swaps. Yeah. You see those? Yeah. 267 positive, 488 positive, 115 positive, 265 negative, nothing, 64 cents, 43 cents, 80 cents. Yeah. There's no big costs. So I have noticed that it's not costing me thousands to trade anymore, which it was. So yeah, but profitability, all that it does using the swap filter, all it does is make these targets more achievable. So the problem has been, obviously, this is your average price. Yeah, it's not the break even line, although I call it a break even line. It's your average price basically. So when you get here, if you're trading something with a massive negative swap, when you get there, you will not be break even. You will be in drawdown by anything up to 1% or so, depending how long you've held the positions for. So what I have found is every time we get back to this line, basically, it is basically back to the line. So you can be a lot more confident. If I set my TPs there, for example, on this long, I can be confident that that is definitely a profit. So that's how it's really helping, by just trading in line with swap. I'm also finding a lot less drawdown since I've been doing it, because the market naturally wants to be drawn. I mean, this euro odd at the moment is a bit of an anomaly because the market's had a negative reaction to the news, but the vast majority of things, the market wants to go in line with swap. Yeah, because the market also does not lose a load of money by trading against swap. Don't forget, banks and institutions also pay an overnight rate. Yeah, this is what the overnight rate is, which is why you see in the news, it's often, that's what they refer to it as. Have we got any coming up? Yeah, there you go. So the Bank of Canada next week, we call them interest rates. Yeah, but the banks call them overnight rates. All banks and institutions pay them as well. So if you've got something like the yen, which at the moment, if you short the yen, yeah, is going to cost $30 swap. But if I long the yen, they're going to pay me $9.55 swap. Yeah, the banks and institutions are also having the same thing. They're obviously going to be paying different rates. We're not going to be paying the same as ours, but they will be paying a negative and being paid a positive. So it's in their interest to do the same thing. So you find there's what I'm finding is there's a lot less resistance or to going that direction most of the time. Yeah, so you'll get the big moves like that, which you're always going to get. If the news causes a rally in the yen will rally. But what won't happen is that it will collapse like that. So if they're trying to go short US dollar yen or trying to rally the yen, there's a lot of resistance to do it. So you find that these pullbacks are a lot easier to get out on. So I think I'm finding it easier to exit positions in line with swap, but it's too early to tell. As I say, this is the first time in 5 years I've paid attention to swap as part of the strategy. So it's too early for me to really give any gauge on whether it's helping or not. But I know it's definitely helping from a financial standpoint. Yeah, I haven't got any massive trading costs. And that in itself makes me profitable, more profitable. Yeah. So, these trades here, and there's not many here this month that have closed out, but if at the moment it's positive, isn't it? So I've got 4, 5, 6, 750, 850, call it 9, take off 3, 450. So I'm somewhere in the region of $4.50 to $5 up in swap costs. If that had been trading in the opposite direction on the yen, for example, that could have been $15 to $20 in costs rather than positive. So, yeah. And don't forget, this is why the yen is a carry trade. Yeah, the yen has been always a carry trade. That's a bit difficult looking at that, but if you scroll out, yeah, we always long this, and the reason is because the banks use it as a storage point for unused capital, because they earn interest. It's basically, it's the same as you as a normal person having a savings account. when you place all of your excess capital that you are not going to spend in a savings account, the bank pays you interest on it. Yeah. If you had a savings account where the bank took money away from you, you wouldn't use it, would you? Yeah. So if it was negative interest rates of negative 0.3 or negative 3%, for example, and you put in 100 grand, you're not going to want them to take 3% of your 100 grand away every year, are you? You wouldn't do it. It's exactly the same with FX. The banks and institutions, if they've got excess capital, if they place it in, if they sell their US dollar and buy the Japanese yen, or either they buy the US dollar and sell the Japanese yen, they're going to get paid to hold those positions. So it makes sense that the market wants naturally to progress in the direction of the swap, not the opposite. So if you look at all the pairs, you go through, look at them. The swap on this one is positive in both directions. Yeah, there's no bias, is there? Yeah. Aussie Swiss, swap long is good, swap short is bad. This one's a bit of an anomaly. Swiss franc, but you know, so it's difficult to tell, isn't it? But we know the yen is a carry trade. Aussie New Zealand, when it ticks, it's really slow ticking today, isn't it? Swap short is good. So, you know, all these shorts are good, but the swap long is also not particularly expensive. It's 760. So, you know, it's not a massive cost involved in it, is there? So I don't know. It's difficult to tell. It's too early, I think, to make a judgment call on it as to whether it's helpful from a directional bias. It's helpful in the fact that I don't have to think about direction. So I'm only going to long it. I'm not going to short it. If there's a short setup, great. If you want to take it, take it. I'm not interested. I'm only going that way because I know that I spent 32 grand in swaps in a quarter. And if I didn't spend 32 grand in swaps in a quarter, I'd be 32 grand better off. So for me, it's a no-brainer. Psychologically, it's very easy to make decisions to buy it. It's very hard to make decisions to sell it, knowing what I know has happened in the last sort of 6 months or so. So, yeah, don't know. Better for psychology, Ryan. Yeah. It kind of takes the psychology out of it, doesn't it? You know, it's a case of I'm not going to long this, you know, but there's not, and this is the thing that I think you'll find. There's only been one long entry on it there. Yeah. There's been multiple short entries on it. Yeah. But those trades aren't working out at the moment, are they? So it just doesn't really have a sort of bearing on being better or worse. It's just it's just purely a cost basis thing. Yeah. So if I'd have longed that there, it would have cost me $10 to hold the trade. If the trade had have continued to drop down for, you know, a month or two, it's going to cost me a fortune. However, if I short it, it's not going to cost me a fortune to hold it for a month or two. That's literally all I'm interested in. Yeah. But like I said, this is something that is new this year to me because we've never had a problem with it before. It's just not been a thing, is it? If you think about when I started doing this, I started position trading just before COVID, properly doing it just before COVID, and before COVID, the interest rates were fairly straightforward, fairly similar. The yen obviously was the one that was always out of whack, and so was the Swiss, and that's the same today. But what we actually had after COVID was every single currency dropped, or every single country dropped interest rates to virtually nothing. So obviously the interest rate differentials were virtually nothing. They were all the same. So therefore there was no massive swaps. Then all of the countries started to rise their interest rates at the same time. So the interest rates started to rise together and stayed close together all the way. So there was no very big differential. Then they all froze their interest rates at the same time. Now, some of them got a bit further than others. So we started to see interest rate differentials getting a bit wider during the freeze and staying wide for around about a year. When I look back at that year, it wasn't as profitable as previous years, quite possibly because of that, but it's difficult to tell. When the interest rate drops started to unwind the interest rate rally, they all went at different times. So the swap costs got dramatically larger. Euro went first and went fast. So the euro dropped its rates really quick where everyone else stayed the same. So the interest rate differentials went through the roof. Euro pound was one of the trades that cost me over $4,000 to hold the euro pound long. Long. And that was the one really that went, holy crap, why did that cost so much money? And you look at it, the pound froze interest rates at 5%, the euro dropped to 3.5%. It's a massive difference in interest rates, therefore the swap costs went through the roof. But you don't notice it because it happens month by month by month, and it kind of creeps in on you. So it's something you just need to be aware of now, and this will change, yeah? So with the euro odd at the moment, that's the cost of doing business. If all of a sudden the Australian dollar drops its interest rates by 1%, we'll be trading that in both directions. But right now, it's not the way to do it. So it's just something you need to be aware of, basically. I think it's very important at the moment. But so swaps are the difference in interest rates between currencies. Yeah, basically. There's more to it. So basically, whenever you take a trade, your broker takes a loan out on your behalf, and that loan has interest rate paid on it. So they pass the interest rate on to you that they pay on the loan taken out on your trade. Yeah. So you borrow money. This is a leveraged account. You are borrowing money to hold a position overnight. Therefore, you pay interest on the loan, the borrowing of the leverage, etc., etc. So there's a lot of cogs under the hood, but at the end of the day, it's all linked to interest rates. Yeah. If you look at the interest rates, the yen interest rate is 0.25%. The interest rate on the pound is 4.75. Yeah. So look at this. Swap short is $40. Yeah. Swap long, they're going to pay you $12 because the interest rate differential is 4 point whatever it is. Yeah. You look at something with lower interest rates like the Swiss franc. The Swiss franc's interest rates are down at the 1% mark. The swap rate is $13, not $40, because their interest rate is much lower than the pounds. Therefore, the cost of the swap cost is a lot lower. But also, they're not paying you positive to go long on it. They are charging you because the interest rate differential is only 0.75. Yeah, so it's all related to interest rates, but it's not a simple mathematical formula because different brokers will also charge you different swaps, because what they do is they put basically brokers make money by spread, swap, and commission. Yeah, so those are the three ways that brokers make money. Every single time you press the buy or the sell button, they make either a commission and a spread, or just a spread, depending whether you've got a commission-free account. And then every time you hold a trade overnight, they charge you a swap. On Wednesdays, they charge you 3 times the swaps or whatever. Yeah. So that's how the brokers make money. This is the bit that is done on your loan. That is the spread between the bid and the ask, which is what they are going to get as a price and what they're offering you as a price. So that's their markup. Their swap has an interest rate that they have to pay on your loan. They also mark that up, and the commission is a cost of pressing a button. Yeah. That's how the brokers make money. And what they want you to do is basically press the button as much as possible, which is why they all give you trading courses for free that teach you a strategy that doesn't work, so that you press the buttons as much as possible. Because every time you get stopped out, you need to press the button again. Every time you press the button, they make a spread, a commission, and if you hold it overnight, a swap. Yeah. And you'll find that most of the brokers that sell you, that give you away free trading courses, are teaching you 2 different types of strategy. And there's a very good reason for this. They will teach you a scalping strategy, an intraday scalping strategy that makes you press the button multiple times a day to try and get small movements out the market using a stop loss, knowing full well that because the market moves up and down, your stop will get hit all the time, which makes you press the button over and over again. Then they will teach you a swing trading strategy, because the swing trading strategy is something where you're going to hold positions for anything up to 2 to 3 weeks to take advantage of market swings, because that way we're going to charge you a swap around about 15 times. Good money, isn't it? That's how brokers make money. That's why they all give you free courses and teach you how to trade and give you all the tools you need to be able to press those buttons, because that's where they make their money. 60% of people lose 60% of their account within 60 days. Therefore, we just replace those 60% with a new load of people and we teach them to press buttons. And as more people we can teach to press buttons, the more money we make. Hey, I'm your friendly broker. He is not your friend in any way, shape or form. He is the worst enemy you have. DAX is moving, is it, Virginia? Oh, good. Hedged on both today. DAX is going for a break of the highs. I'm going to take a chance on the DAX today, and I'm going to close my shorts. I will re-hedge this if it drops, but it looks like it's going for another all-time high. So I'm just going to take a loss on the short positions and see if I can get out of this on a push. Obviously, where it's going, I don't know, because we've never been up here. So we're off. ADR, I guess, target to the upside. So we'll see if we can get a break long. I'll watch this and I'll need to re-hedge it if it does start to break back down again. So it's a bit of a risky move, this, because I'm locking in a $350 loss. And I'm looking for it to push back up to get me to a break-even position. So I will watch that. If we do break down back down to here, I'm going to take double the loss. So it will cost me $700 for a new break short, which I'm going to put in now, actually. So I'm just going to re-hedge there. So if the break doesn't go, I will re-hedge there, and that will cost me 700. But all-time highs, you know, you got to look at the DAX basically, and what the DAX is doing at the moment. It's just making new highs every day, over and over and over again. So I'm just going to assume that we're going to continue to do that today, but I will want to be out of this by the time non-farm payroll comes out, because obviously it's all going to move at non-farm. FTSE's doing exactly what it's done all week, which is annoy the hell out of me and do absolutely nothing. It's terrible. FTSE is absolutely shocking at the moment. Really nice break on Tuesday, made a very nice profit on Tuesday, but really tough week this week on the FTSE. It's just rotational. Every single day, it's just rotation at the moment. Pound is struggling, so watch that. Also trading the French index, about to hit 5R. About to hit 5R there. Oh, the French index. I've never looked at the French index. Yeah, I mean, basically, excuse me, the opening range breakout strategy and the stock index hedge strategy will work on any index. All stock indexes have an open. So you could trade the Japanese index, obviously the French. The DAX is the largest liquidity because it's the largest economy and has the largest corporate holding, really, if you like. So pretty much all the DAX is made up of is car manufacturing. So most of the stocks in the DAX are manufacturing. FTSE is mainly financial services industry. But the French, obviously, at the end of the day, it opens at the same time. So we get the same thing. All the opening range breakout strategy and the stock index hedge strategy is a momentum breakout strategy. It's just that we know when the momentum is coming. When they ring the bell to open the exchange, that's when the momentum hits. So it's a breakout strategy in the fact that if we want to buy a load of stocks today, it'll do that. If we want to sell a load of stocks today, it'll do that. If they're not doing much with the stocks today, it'll do that. There's only 3 outcomes. But the edge in the strategy is that we know when it's coming. And if the French exchange opens at 8 o'clock, you will have the same edge. So you can trade any index you like. Some are more liquid than others and some have higher spread than others. So that's the only thing you've got to watch. If they are gappy So you find some indexes, you'll get gaps between the candles, which means there's low liquidity. If there's low liquidity, there's chance of slippage. Slippage can work in your favor in a breakout, obviously, but it can also not work in your favor in a breakout. So it's mainly down to the liquidity, which is why the vast majority trade the Nasdaq, the Dow, the S&P, the DAX, and the FTSE, because they're the highest liquid indexes. But the Japanese one is good, and obviously the French one as well. I don't have it though, the France 40. A lot of brokers don't have the France 40 or the Nikkei, so it's down to your broker really, who's got what. Position trading works well on the UK 100. I've never found position trading to work well on any index, personally. The trouble with indices is they are trending instruments. This is obviously not trending at the moment, but indexes trend. Yeah, they are manufactured and designed to go up. That is their job. Yeah, so the inherently stock indexes will rise all the time, long term, because they are a measurement of the top, in this case 100 companies in the UK. So if there is a company underperforming, they will drop the rankings and disappear out of the top 100, which replaces them with a company that is doing well. Yeah, there's always 100 stocks in there. If you're number 99 and you have a bad quarter, you drop to 101, number 100 jumps up into your spot. Therefore, as companies only make profit and only increase their share sizes by expanding their company and doing more stuff and making more money, inventing more products, and the idea is to please your shareholders by making your share price go up, they only go up. What's the worst thing that we can get into as a position trader? A parabolic trend. What do these things do regularly? Go parabolic. Earnings fortnight, you'll get parabolic movement. In that case, your positions will get in trouble. So position trading, if you're going to do it on stock indices, I would recommend long only position trading. Don't take shorts. However, when you look at something like the S&P and the market that we've had recently, yeah, this 1 year long bear market, these are years going past here. We had an entire year bear market, but look, every other year is bullish. Indices go up, yeah, not down. There's a very rare occurrence where we get a bear market. Bear markets are just not, they don't happen very often. If you were to buy the S&P in January and sell it in December, virtually every year you will come out with somewhere in the region of 8 to 14% profit. That's just how it works. So if you want to have a good savings account, buy the S&P in January and sell it in December. You very rarely will go wrong. Warren Buffett, biggest investor on the planet. What does he do? Buys the dip in the S&P. That's it. That's all he does. All he does. I've got his strategy replicated with the market reversal alert CA. Yeah, he buys the dip in the S&P. Now, people like Warren Buffett will have done one of two things there. Held into massive drawdown or made a loss. But what's 1 year in 10 making a loss? 1 year in 8 making a loss? Doesn't matter, does it? So if you're going to position trade, do that. Don't do that, because that's all they do. You know, most successful traders have just, you know, they run long only strategies on indices. And it's the same in all of them, but they're to varying degrees. Yeah, you've got to bear in mind, obviously, the economies of each country have a massive impact on the stocks. So, you know, we have in the UK at the moment, we're struggling. Yeah, we've had a budget which is strangling UK economy. So there is no expansion expected in the UK business sector, because we've just made them pay a shed load of extra tax. Therefore, that's going to stifle their business growth, which is going to stifle their stock price. So the FTSE is probably not going to rally like crazy, but it will go up, but it won't go like that. Yeah, so it's just the way it works. Darwin X has it, does it? The France 40? Never, yeah, no, I mean, I've never looked at it. Um, Index. Oh yeah, we got the Aussie 200, the France 40, the Spanish Ibex as well. So yeah, there's a number of other indices. Don't know whether I've got the. Oh, I don't know. I'll have a look at them. I'll have a look at those. I mean, I've never done any testing on any other indices. So if what I would recommend is if you want to trade the other indices with the ORB strategy or the SIH strategy, back test. See how they operate. As long as they have as long as every single day at the same time they open and they go, or they don't go, it doesn't matter. They have to have an open. That's it. Whether it goes or not is not in our control. It's in their control. So, but as long as there's an open and you can see that when it goes at a specific time, then obviously you'll be off. But test it, back test it. And the main thing to bear in mind is the spread. Some of these indices, because they are low traded, have horrible spreads. This is a 5-minute intraday strategy. Spread is important. The FTSE's got a big spread on it. But the spread does vary. So at the moment, the FTSE's got a big spread, and you tend to find it's liquidity based. The DAX has got virtually no spread at all. So test, test, test. What broker are you using for indices? Darwin X. Darwin, yeah, Darwin X. Don't get positive swaps on the indices. Probably not, no. But indices, that's the thing with indices. Nobody holds indices overnight. So indices are an intraday instrument. So you can hold obviously indices overnight if you want to, but yeah, I mean if they've got negative swaps, then yeah, it's going to cost you, isn't it? So, but yeah, not a lot you can do about that. I have no luck with the Nikkei at 2 a.m. Almost never works. Yeah, and you know this is the thing. If you've got an index that is not trending, you know, if you look at the FTSE compared to the US indices, yeah, I mean it's not exactly the trendy beast, is it? Yeah, but it will always do that though. This is the thing. Indices will always rise or attempt to rise every year, but sometimes they won't do it by much. These are just flag breaks, flag break longs. So you'll have rallies. This is earnings. Indices rally on earnings. When there's faith in a company because earnings, there's more stock bought. But after the stock is bought, there's no reason for the stock price to increase. And it's down to the type of stock that you have. So the NASDAQ, for example, has a much bigger movement because it's tech stocks. Yeah, what's popular at the moment? Tech. Boing, off it goes. Yeah, tech's always going to be popular, isn't it? Car manufacturing. So the DAX, the majority of the DAX is cars. Yeah, so you have stagnation in the market because a lot of this is car export. It's Volkswagen, Mercedes, Audi. Well, it's all part of Volkswagen. Porsche, it's all part of the same thing. There's only four. I think there's only 3 or 4 holding companies that own every brand, isn't there? A lot of them are German. Yeah, Porsche, Mercedes, Audi. You know, there's tons of them, isn't there? So when they're not doing well, it ain't going to do well because a lot of that is made up of the same thing. And a lot of the companies in the DAX are companies that supply the car industry. So if the car industry is doing bad, all the companies supplying the car industry also do bad. Yeah, it's all interlinked. But at the end of the day, shareholders need to be paid. You pay shareholders with profits. Profits need to rise. So businesses' focus is always in making money. And if they're going to make money, their stock price is going to go up. And that's literally all you need to know. about indices. That's the way they work. Always has been, always will be. And it's the same old thing. If you're not good enough to be in the index, out you go, because there's someone else waiting to take your place who is going to drive the index up. Yeah. But it's just, some of them are better than others. Have you tried long only strategy with ORB SIH? No. Because it's a breakout strategy. You don't get breakouts long all the time. You get breakouts short as well. You can try it if you want to. You can go long only. Do it. Do the test yourself. Only take longs. I'm just looking at the most recent profitable trades. Yeah, I mean, there's one there. This is the Dow from 3rd of December, whenever that was. No? 2nd of December. Yeah, it broke short. So you wouldn't have had that profit. You'd have missed that because it broke short. Broke short there. Also broke long, but it whipsawed. Broke short, yeah? So they break... To be able to drive an index higher, you need stock, yeah, or you need capital, yeah. So to buy stocks, you need capital. So what you need to do in order to buy an index or buy stocks within an index is gain capital. What you tend to do is sell other stocks to buy stocks, which is why we get market structure, yeah. So you got to sell some stock to buy some stock. So the idea is you want to buy the stock that's going to go up faster than the stock you're holding. So you sell slow moving stocks to buy fast moving stocks. So you will get constantly movement down and then movement back up again. So if you took long onlys, you would only get those. You'd miss all the short profit. Long term, it's going to go up, but short term, it comes down a lot, doesn't it? So, but try it. Yeah, there's a lot of people are long only. If you watch other trading channels that focus on stock indexes or futures, you will find a lot of them have long only strategies. But you look at how they trade, and yes, they do very well with their long onlys, but they miss a load of short onlys. Yeah, because their long trades also don't work out when the market goes short. So if you go long only and you take a long break and it goes short 5R, you miss it. You can't say I'm only going to go long because the market is random. But there are times when you would go, yeah, brilliant. But then look at all these short breaks. You miss them all. They're behind my head. But you'd miss all the short ones. But this, at the moment, yes, you should have gone long only on the DAX for the last 5 days. But if we'd known that, we would have done it. But we haven't got a time machine. I've got out of my shorts here because I think that we're going to repeat the last 5 days. If I'm wrong, it's going to cost me $700. It's risk. All it is risk management, isn't it? You're just managing risk. You've no idea where the market's going to go. I have no idea what's going to happen. That could be the high of the day. That could be the high of the year. This could be the highest point this year. And I've just basically bought the highest point of the year. I have no idea. No one does. It's just random. Futures are better if you want to hold indices for longer than a few days. Futures are terrible if you want to hold indices for long days. Unless you've got 50 grand in the bank, you can't trade futures and hold overnight because it's too costly. You've got to have a big ton of cash to hold a futures contract overnight, which is why none of the prop firms that trade futures allow you to hold overnight. You have to close positions end of day because the cost of holding a DAX contract overnight is about 4 grand. And if you've got 5 contracts long on the DAX, you need 20 grand in the bank just to hold one position. It's not doable. CFDs you can, obviously, which is why we trade CFDs, because CFDs haven't got the leverage restrictions that futures markets have, and the futures are too expensive, which is why it's all intraday. Everybody trades intraday on futures because even the banks and institutions trade intraday futures out by the end of the day, flat. But people like Warren Buffett will hold futures contracts because if this is the thing, it's always that, that saying, money makes money. If you've got $1 billion, you cannot fail to make money, because if you've got $1 billion and you have something like the S&P bear market, yeah, if you've got $1 billion and you bought it on the first pullback in January, yeah, and you bought the second pullback in Feb, and you bought the third pullback in March, and you did the same in April, and then in May you bought it again, and June you bought it, and then you bought it in July, and then you bought the August pullback. September you probably wouldn't have, but you would have had to in October and November. You haven't made any money. It's just cost you a massive amount of leverage hold. But if you've got $1 billion, if it goes down for the next year, I'll hold it for the next year. I don't care, because it is going up. That's it. It's going up because that's what it does. That's what it's always done. That's what it will always do, because it is manufactured to do that. It cannot go down, because if it goes down, it means the top 500 companies in the US are all going bankrupt. And if that is happening, it's the end of the world. But it won't happen, because if the top 500 companies in the UK are going bankrupt, in the US are going bankrupt, what's happening is they're dropping out the bottom of the index and being replaced by the other companies which aren't going bankrupt, which means that their stock price rises, which means the index rises. It cannot go down indefinitely. You never have more than a year. This is the biggest bear market we've ever seen. Go back and look at your S&P charts. We never had anything like that. This is a COVID fallout. That doesn't happen very often. Very rare. Warren Buffett would have been sitting there going, hurry up, because he knows that's happening. But you try holding that. You can't, because you haven't got the liquidity to do this. As a position trader, I would be in, out, in, out, in, maybe out, but if I wasn't, I'd be in and out, in, crapping my pants, squeezed to death, holy crap, break even, in. Yeah, that's position trading, but you're not holding it for the whole thing. You're in and out for months, not making much money at all. And especially if the swap costs are to hold it long are horrible, then yeah, it's going to be a painful year, isn't it? I've had a painful year this year. I've made money, but I haven't made anywhere near as much as I did before, because the market conditions are wrong. Market conditions are wrong for Warren Buffett that year. The rest of the years, they haven't been. This is what it's all about. You can't, this is the thing that people fail to understand with these markets. There is no strategy that works all the time. Yeah, it doesn't matter whether you've got a breakout strategy, a mean reversion strategy, or a trend strategy. There is only 3 strategies. We covered all this in the members sessions. There's only 3 strategies that exist. You can have 1 billion trading strategies out there, but they are one of those 3. Yeah, if you're trading a breakout on the opening range of the stock indices, you're trading a breakout strategy. If you're using Bollinger Bands, you're trading a mean reversion strategy. If you're using a moving average, you're trading a trend strategy. Yeah, if you're drawing lines and taking that, it's a breakout. Yeah, if you're taking that, it's a pullback trend strategy. Yeah, if you're waiting for it to go there and you're trading that, ADR reversals, it's a mean reversion strategy. There is only 3 strategies on the planet. The market will either do that, or that. There's only 3 things it does. It stays in a range around about 80% of the time. It's breaking out into a weak trend or a parabolic trend around about 20% of the time. So in this type of market, mean reversion trading works very, very well. Breakout trading, trend trading, you're dead. So if your strategy is mean reversion and trend in a range bound market, you cannot make money. It's not possible. Yeah. In a trending strategy, if you are a trend trader or a mean reversion trader, happy days. You can make money. If you're a breakout trader, you're going to find it very hard, because you won't be able to establish a range to break out of. So you will lose money. But trend traders and mean reversion traders in a trend will make money. In a parabolic trend, the only people that make money are trend traders. Yeah. So if Warren Buffett is a trend trader, which he is, he won't make money there, because he's a long only trend trader. If he was a short and long trend trader, he would have made money there. In a market that goes sideways, Warren Buffett doesn't make money. But Warren Buffett understands this is a long-term edge. Yeah. Opening range breakout, SIH, is a long-term edge. We have weeks and weeks and weeks where it just doesn't make any money. Then bang, 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 I make 15 grand in a month. Why? Because the market is breaking out all the time. It's a breakout strategy. It doesn't work in a range, doesn't work in a trend, but it works when the market is parabolic during earnings fortnight, for example. Yeah. So that's all trading is. It is you develop a strategy, which is one of three types, and you apply it to a market using risk. You wait for the market to fall in line with the strategy type you've applied, and you make money. What you do is, in the times where the market regime is incorrect, you limit risk. That's trading. That's all it is. And this is why I position trade, because I have no idea whether the market is going to be range bound, parabolic, or trending. What I do know is during range bound and trending markets, my strategy works. It doesn't work in parabolic trends. Yeah, parabolic trends are around about 10% of the time. So 90% of the time, my strategy works. That's my edge. But I have no idea when it's going to happen. That's what successful traders know, is that you cannot make money every day. I am hedged on both of these today. Totally normal. That's what happens all the time. I hedged on both the US indices yesterday. Yeah. But the week before, I was up 8 grand because the market broke out every day on every index. That's where my money is made. My money is limited. My risk is limited in this condition. $294 is all I'm going to use, pound is all I'm going to lose on the FTSE today. Yeah, but when that thing breaks out, I make 600 to 800. But I can't control when the breakouts come. The market controls that. I apply my strategy and my risk around the market. I can't make the market break. That's what the success, that's basically all trading is, isn't it? At the end of the day, you're waiting for the market regime to match your strategy type. But what most people do, unfortunately, is they'll use a strategy, they'll trade a strategy for a bit, they'll find it doesn't make money for a while, so they'll stop using the strategy, and then they'll move on to a different strategy. That strategy that they just moved away from suddenly has the edge play out because the market regime switches to what the strategy type is, and all of a sudden it makes a load of money, but they don't make the money because they've moved to a different strategy. So they were using a trending strategy during a range, and the market went range bound, so they decided to dump the trending strategy and move to a range bound strategy as the market started to trend. So the range bound strategy started hemorrhaging cash, but the trend trading strategy they dumped made money. Yeah, stick to one strategy, do it for a year, guaranteed to make money, because the market will apply itself to that strategy type at some point. You've got to wait for it, and all you're doing is you're limiting the risk when the market's not right. Yeah, look at this FTSE, absolutely hideous for breakouts, absolutely hideous. Yeah, but 2 weeks ago, boing boing boing, just printing money. Yeah, but we're limiting this to that when it's not working. When it's working, we're letting it generate 600 to 800 a day. Yeah, so all we need is more days doing that than doing that. Around about 65% edge we have. So 65% of the time we will make money, but you've got to apply it every day because you don't know which day it's going to be. And it was sod's law that you'll go, I'm not going to use SIH this week because I'm off on holiday. That's the week you get 5 in a row. This is why your backtesting results will never be the same as what happens in the real world, because you won't apply it the same as in a backtest, and the market won't do the same as in a backtest because it never does. But this is trading. No one said it was easy, did they? I thought about that, but in the last month, I've made more winners trading the FTSE short than long. Yeah. You talk. Correlation is something else. You talk about the correlation. Its personality has changed. The correlation with the S&P is completely broken down. Correlation is something that changes on a regular basis as well. So sometimes you will look at the Nasdaq and the Dow, and they will do exactly the same thing every day. So they will look, bang, bang, doing the same thing. And then other days you'll look at it and the Nasdaq will collapse by 2 ADR and the Dow will fly by 2 ADR. Yeah, opposite. But it's all to do with what stocks are being purchased and what sectors. So a lot of stock trading is sector based. So let's say, for example, the world develops the hydrogen engine for aircraft, and they find a viable solution for a lightweight hydrogen jet engine that cuts emissions by 90%, cuts costs by 60%, and costs 50% less to manufacture. Do you think you should buy or sell the aerospace stocks? Buy them. So what's going to happen to every index that contains aerospace? It's going to rally. What's going to happen to every index that contains suppliers to the aerospace industry? Chip manufacturers, aluminium manufacturers, their stocks are going to rise. Yeah. So you see confluence and correlation in indices when there are sector purchases happening within the stock market, but you can't tell when they're going to happen. So if all of a sudden Tesla's stock flies through the roof, what's going to happen is every chip manufacturer that supplies Tesla's car products is going to fly through the roof. Gold will fly through the roof because a lot of the components that go into Teslas are gold plated components. Yeah, so everything is interlinked, which is why you see things suddenly go the same way at the same time and then go the opposite way at the same time, because that is Nvidia's stock price crashing because their latest AI chip has blown up something. Yeah, but the Dow will fly, but that will collapse because of one individual stock. There is no way of forecasting anything, which is why you just get in, you apply risk, and if Nvidia's stock price collapses and then NASDAQ collapses and you are trading a breakout strategy, well done. If you're trading a range bound strategy, it ain't going to work that day. But the reason the market's moved has got nothing to do with making money. It's the way you apply risk and strategy to a market and wait for the market to match the strategy type. That's how you make the cash. Futures via a broker. Yeah. I use IEG and Trade Nation. Yeah, they're all good. Morning, AZ. Long time no see. I had noticed you'd gone, to be honest. I don't pay too much attention. But welcome back, AZ. You have a nice green star, which is good, which means you've been a member for multiple months. My best mate blew his account going long the FTSE during COVID because he was buying but never took any profits on the swings. Yeah. But that's that's a trading problem, isn't it? It's nothing to do with the strategy. The strategy was probably sound, but if you don't execute the strategy correctly, if the strategy calls for 1 hour risk and 2 hour reward, and you only take the 1 hour risks and never take the 2 hour rewards and wait for the 2 hour rewards to turn into 1 hour risks because you didn't take the profit, it ain't going to work. We did a whole session in the members streams on the probabilities of trading. Risk reward doesn't work. It's a zero-sum game long term. Everybody that trades a risk reward based strategy that hasn't got a specific edge that is replicable by time or news or something like that, it's never going to work. It's always going to return to zero, because what will happen is, as I just said, if you've got a 1 hour risk and a 2 hour reward, yeah, and your strike rate is 50%, in theory, you would expect that to be achieved. But what will happen is, long term, that probably will play out. But what normally happens is your P&L goes up and then your P&L goes down, and you change the strategy. Yeah, because you will have periods of weeks and months where it just won't work and people jump ship. And this is the problem. Position trading solves all of that, because you get in and you wait. The thing that we can have on our time as traders is time. On our side as traders is time. Yeah. So if we get into a trade and it doesn't play out, we just wait for it to play out. Yeah, because it will. Because all the market does is do that and that and that and that and that and that. It's going to do that. If it doesn't do that, it will do that, and then it will do that. But it will go up and down because it doesn't do that forever and it doesn't do that forever. So all you've got to do is adjust your price so that you can get out of your trade. You just got to survive. This is what we covered yesterday in the members stream. There's three reasons people don't make money with this style of trading. Yeah, it's very simple. But you can survive anything if you take the Warren Buffett approach, which is wait for the market conditions to match what you do, not try and force your strategy onto a market. Because everybody that, this is the thing I always say. What do you do there? Well, it's obvious. You range trade. When do you range trade? Well, I probably would have taken a short there. Excellent. So you got that one. Yeah. And then you took that one, you got that one. Yeah. Then you took that one, you didn't get that one, but you lost twice as much on that one than you made on those two, because you're applying a strategy to something you see on your chart too late. You needed to apply your range trading strategy there, right at the beginning of it. But because you didn't have a time machine, you didn't know that was coming. Therefore, you couldn't apply the right strategy. So by the time you identify that you should be applying a range bound strategy, it's ready to break out and go into a trend. Now you should be trying. So what you should do is every time you see a trade, a trend, a range, you should become a trend trader. Because what happens after a range? A breakout. What happens after a breakout? Typically a trend. So as soon as you see a range form for 5 days, become a trend trader. Yeah. Every time you see something trending, yeah, assume that this is going to be when it starts to range. You'll probably make way more money applying the opposite strategy when you see something playing out on your chart than trying to trade that, because it won't work. You've missed it. This is why moving average based strategies don't work, because people that identify a trend identify it too late. So you wait for it to push up, then you wait for it to pull back to a moving average, and then you wait for it to push up, and then you wait for it to pull back to the moving average. You've missed it, mate. The trend started here. There's no point getting in 3/4 of the way through it. It's about to finish. It doesn't work because you're trying to apply a strategy to something that's already happened. This is why everybody says, why is it every time I press the buy button, it goes the opposite direction? Well, because you're applying your strategy to what it's just done. Now it's going to do the opposite. Mean reversion. This is why we're mean reversion traders. 80% of the time it does the opposite to what it's just done. Simple. Just got to change your mindset. I haven't taken any new trades in weeks because I'm still holding US dollar CAD and New Zealand dollar US dollar. So you're still holding that short, I presume. I would cut it. I mean, I cut it ages ago. I'm out of that. You know, like I said, that was the cutoff point. The elections were the cutoff point. It's not now. This is a new market. This could continue to do that forever now. It's never going to get back here because we now got Trump. But we don't know. Trump might really cock it up. You know, this is the thing. You can't predict the future. Trump is either going to be good or bad for the economy. But it's not just Trump. It's all sorts of things. If NATO get involved in Russia, that's going to affect the US. Yeah. If US decide to pull out of NATO just before they get involved in Russia, that's going to affect the US. There's a million things that can happen to this. But there's been an absolute change in the fundamentals of the US dollar when he took over. So you cannot now, and this is why I exited everything before the election, either in a profit or a loss, because it's too risky to try and hold something indefinitely. You can't close your eyes, cross your fingers and hope. You have to manage risk. You have to take losses or get out at break even if you can. Had a couple of break even exit opportunities, but I held it so long. Take it off now. You say if you take, right, so there's a good point, AZ, right? If I walk away at break even, I'll have nothing to show for the past 2 months. Yes, you will. You haven't lost money. 95% of traders lose money month in, month out. If you walk away now with a break even and you haven't made money for the last 2 months, what have you not done? Lost. Your P&L is flat. Job done. You just survived the worst squeeze we've had in a God knows how long on the US dollar CAD. You survived it. What have you just done? Become the 5%. Yes, you're not going to make money all the time. You're going to lose. You've got to take the losses. You've got to learn to take the lose. Where's Tom Hugard's book? It's around here somewhere. Every loser wins. Learning to take losses is the biggest learning curve. Just don't do it very often. Yeah, we don't do it very often, do we? We don't get parabolic squeezes like that very often. Got to go to the 4-hour chart ready to see it. But these things don't happen very often without doing that. But the reason they don't do that is because you get a fundamental shift at the end of the squeeze. Yeah, normally in a squeeze, it will need to unravel the squeeze. Yeah. But when you get a squeeze that changes the fundamental direction, that is where you have this. That's why I got out. I got out, took a hit because changed. But you don't know if it's going to change. This is the thing. This is the impossible part to explain, because you cannot tell what is going to happen. I took a loss on this up here, didn't I? And Kamala Harris could have got in, and I could have been going, right, okay, that was the wrong call. But there's a 50-50 shot, isn't there? So that is your decision-making process, is do I take the loss or don't I take the loss? Your choice was not to take the loss. That's where you are. I took the loss, and I am now in the nice position. But I could have equally been you, and you could have been me. You know, it's discretion. This is the bit of trading that no one can teach anybody. Discretion. Yeah. This is what that new EA that I've been developing is all about. It's about using your discretion to trade, and just letting the market move, and basically assume one thing is going to happen, and if one thing doesn't happen, assume the next thing is going to happen. So all you're going to do is you're going to say, oh, I'm going to short it up there, I'm going to buy it down there. It will either work or it doesn't. But as long as you've got a plan that if it doesn't work, like if that doesn't happen and it does that, you have a plan. And if your backup plan doesn't work, you have a plan. At some point, the plan will work. You know, if you look at any trading strategy, people all say all the time, in any trading strategy, oh, there's always a possibility of getting a losing run of 10 trades. I don't know why we pick 10, but we do, don't we? It's like you could have 10 losing trades in a row. So plan for 10 losing trades in a row before you get the winner. You'll make money, wouldn't you? So instead of, and this is what position trading basically is, I'm going to long it. But what I'm going to do is I'm going to give myself 10 trades being wrong before I'm right. It's that easy. It really is that easy. Just don't continuously take losses on your account. Just wait for the market to show you what the market shows you, which is that it will be right at some point. There is very, very, very few instances in the market that do not have a 50% retracement on them. Very, very, very few. Yeah. You can draw them all day long. That's all it does. It's all it does. Go back, look on your charts, and just go back in time as far as you want to go back. I can't go back any further. But just go back and look at your charts and show yourself. But you've got to factor in things that are fundamental shifts. When you see something that doesn't do that, go and look at the news at the time and you will find a reason. Interest rates went up by 0.5% unexpectedly because of X. That's the reason it didn't do that. But if normal things are happening, market structure will be normal. When you get a load of unprecedented events in a year, you'll get an unprecedented market. Like we just looked at with the S&P 500 bear market. Doesn't happen very often. Why did it happen? Because COVID. Yeah, we had the biggest rally in stock market history while businesses were closed in COVID. There was only one thing that had to do, correct itself, because you do not buy stocks in businesses that are not trading. Their stock prices went through the roof. The market went nuts. For some reason, it put all its money in the stock market when none of these guys had their doors open. They weren't generating profits. Their stock prices went through the roof. All of their stocks got overbought. Therefore, we had to have a year-long pullback. But why did that happen? COVID. Have we ever had one of those before? No. Will you ever see one again? Maybe. But you know what to do this time. But the market will also know what to do this time. It won't buy the stock market like crazy next time we have a pandemic, will it? But those are the losses. Yeah, once or twice a year, you're going to get a squeeze that has a fundamental shift on the end of it. And that is a loss. But if we take 2 losses a year, maybe 3 losses a year, fine. The profits are going to way outweigh the losses. But if you don't take the losses, you will just blow your account. You've got to do that. I've got my target at 200 ADR. It seems like ages away, but you say that, it seems like ages away. Non-farm payroll this afternoon. You could easily find yourself here. You know, if non-farm payroll this afternoon collapses the US dollar CAD to 150 ADR, yeah, do you know what I would do in your position? I would take off every single trade above that line. When we get to there, if there's a trade short here, it's coming off. Every single trade above the line comes off. Yeah, and use 100% of that profit to close out positions below the line, and you will be left in drawdown. However, if that news causes a trend reversal, you'll be out of it next week or the week after. But if you leave it and your average break even is there and you hope it gets there and it spikes back like that, you've missed your opportunity to reduce the risk. This is what position management and drawdown control is all about. Yeah, using your profits to reduce your losses. You've got to do it. It's hard. You're going to take a loss, but do you know what? This weekend you'll sleep a lot better. Quality of life. I need some seriously negative news this afternoon. Yeah, you might get it. You may well get it. This is what drives the market. I had an idea overnight for a strategy, and it's weird overnight, but I get these things where I suddenly wake up in the middle of the night, and for some reason, some little arse in my head just goes, do you know what? We're going to think about trading. And that's it. I can't sleep for the rest of the night. So I'll suddenly wake up and something to do with trading, a chart will pop into my brain or something, and I'll be like, oh, that's it. That's the end of the evening. And I can't sleep because something popped in. Do you know what popped into my head last night? Was a strategy which I've never actually explored, but a strategy that literally just trades at a specific time of day. Oh, my alarm's going off. One sec. What's the US? No, what's the other one? Euro odd. Okay, so that's my alarm triggering. We've got 31 minutes. If this candle closes below that line, I'm not going to take a short. So I have a decision to make whether to take a manual on this. I think I'm going to. I'm going to take a market sell there, which brings my average up to 125. Yeah, so it gives me an out within the propulsion area. So I now have an exit in profit at that point. If that hadn't have triggered that trade and we sit around up here for 4 or 5 days, I will want to have that trade on. If this afternoon on the news, the euro suddenly collapses for any reason, or the Australian powers up and undoes its move, I'm out. But without that position on, my average was down here, wasn't it? So I've now got an exit opportunity at 125 ADR. Yeah, so the strategy that I thought of was based on news. So obviously we know the market moves on news. It's fundamentals which drive FX markets up and down. So I came up with this strategy, or my brain came up with a strategy overnight, based on news. And it's not specific news, it's the news time. Yeah, so every day, if you go through the news, right, and just expand this out, every day the US releases its news at usually 3 p.m. yeah, or 1:30 p.m. There are only 2 times we get US news released: an hour before the market opens or half an hour after the market opens, right? So that's the news for the US. So if you go through and look at all US news, you will find the time is either 1:30 or 3 p.m. 1:30 Next day, 1:30, 1:30, 1:30, 3 p.m. Yeah, and 1:30. Yeah, so that's all that happens. 1:30 and 3 p.m. So I came up with this strategy idea to trade a US dollar pair. It doesn't matter which. You could use currency correlation to pick the weakest currency at the moment. So if there's a particularly weak yen at the moment, trade US dollar yen. If there's a particularly weak pound at the moment, trade pound US dollar. Yeah, but basically all you're going to do is at 1 p.m. you're going to take a trade in a direction. It doesn't matter. So you could use a moving average to filter direction, for example, like 100 moving average, let's say. So if price is above the 100 moving average, I'm going to buy it. If price is below the 100 moving average, I'm going to sell it. It doesn't matter what you use. It's just a filter to flip a coin random, right? And all you're going to do is you're going to apply a 1R risk on it, which I would base on ADR, because news, obviously, we know spikes the market. Often we'll get an ADR hit off of it. Often we won't. So if you place a stop loss 1 ADR away from wherever at 1 p.m, if that news does nothing and the market just whipsaws or it just carries on trading because the news is non-impactful, we get out at the end of the day with either a profit or a loss. Whatever the market's done, we just go, didn't work. If the news is big, unexpected, and it drives the market hard against you, we get out with 1R. If the news is massively in our favor and it goes beyond 1R, we take the profit. Or we move to break even and assume that this is a fundamental shift event and we basically hold it for something like 2, 3R or whatever. Or we can have a filter that says if at end of day, 10:30 at night or whatever, it's in profit, close it. And I thought, because this market is random and it only moves on news, and we don't know which way the news is going to drive the market, because we can see which way it's forecast, but sometimes when it's forecast we don't get the forecast and it moves. Sometimes when it's forecast we get the forecast, it moves. Sometimes we get what's not forecast and it just doesn't do anything. It's totally random, isn't it, news? Let's just apply a risk structure around it. But we do know one thing: it's going to move at 1:30 and it's going to move at 3. So all we're going to do is we're going to try the 1:30. If that works out, brilliant. We'll trade and an outcome will happen. If it doesn't happen, we'll try and get a break even on the 1:30 news because it hasn't gone anywhere, and we'll just get out because it hasn't moved. And then we'll try a 3 o'clock. But we'll take a trade every single day. So even on the days where there is no news, like, I mean, there's building permits there, but we've got news there, got news there. I mean, there isn't a day, is there, really? So it's 1 o'clock. So there is the odd day where you got no news. There we go. So that Tuesday, there's no news on the US dollar, but we'll still take a trade at 1:30 because it's an EA. It's fully automated. We'll take a trade at 1:30, and at the end of the day, if it's in profit or loss, we'll just take it, whatever it is. But it doesn't really matter, does it? Because the days where the movement comes from the news, we've got a chance of making massive, massive gains. We can test different risk profiles on it. We can test half an ADR of risk, quarter of an ADR of risk, 3/4 of an ADR at risk, and then we can use risk reward multipliers of 1, 2, 3, 4, 5, 10, 15, whatever we want to. But it's such a simple strategy, isn't it? Because we know one thing for sure: it always happens at 1:30 and 3 o'clock. Same with the UK. If we're going to trade the pound, it's 8 o'clock in the morning. Or is it not? Is it 8 o'clock in the morning usually? Just looking for the pound news, basically. Whenever we get decent pound news, it's normally 8 o'clock. Euro news as well. That's pretty random throughout the day. But we've got a 9:30 one there. That's the PMIs. They're always 9:30. Just trying to find some pound news now, but I can't. Bank holiday. This is Christmas. Need to go back, really, don't I? £12 p.m. That's the interest rates. They're always at midday. Claimant count 7 a.m. Yeah, so it's 7 a.m., isn't it? 7 a.m. we get the CPI number. 7 a.m. we get the unemployment rate. 7 a.m. we get a lot of news. So it's 7 a.m. So at 6:30 a.m. we will trade pound. But there's not as much news, is there? That's the thing. 7 a.m. retail sales. Yeah. So just came out of it out of the blue last night. It just popped into my head, and I was like, because I must have been thinking about news or something. It's non-farm payroll day, so I was probably thinking my brain was preparing for non-farm payroll while I was asleep. But it's one of those things that I think is a very easy risk-reward based strategy, because trading is random. When you get in, it's going to go up or down. No technical analysis is going to make the market make a decision based on a technical that you have come up with. So if you just place an order before the market's going to move, and we know it's going to move, same as the opening range breakout strategy, there's probably an edge there. So I might build this. I might do this in the members streams next week. I've got quite a lot on with the EA that I'm building at the moment, but what I might do is build a simple EA that is time-based. In fact, we could use the SIH EA, and we could also use the opening range breakout EA. We'll just adjust the times on it. 1 o'clock. There you go. In fact, you could also use the position trader EA, because what you can do with the position trader EA is you can set the times to only trade between certain hours, and we can basically, there's no filtering in there then, is there? Unfortunately, we could use RSI. If we're below the RSI, I don't know, I'll think about that. But yeah, something to test. Basically, you can obviously mark on your chart the same time every day. So if you, best thing to do is, I think with the US, is to go onto a 30-minute chart and just find that 130, which would be for me 1330. No, it wouldn't. It would be, yes, it would. Yeah, 1330. So there. So just mark that 1330 on the chart every day, because that's when the news happens. There we go. Look at that. Hour before the New York Open. And if there's no news, all we'll do is we will just get out at the end of the day. We might have a lucky day. We might have an unlucky day. But if there's no news, it's not going to move the market dramatically, is it? Big move up. Big move up. Yeah. Great strategy, isn't it? But how simple is that? Big move down. Yeah. So that's what you would have had on those days. Chop. Big move down. Chop. So big move, medium move, chop, big move, medium move, chop. So you've had 2 choppy days, 4 big moves, and that was it, wasn't it? Strategy. Simple, isn't it? All we're doing is we're using the news. But we don't need to know what the news is. Doesn't matter what the outcome of the news is. What's going to happen is it's either going to move or it's not. So it's another way of applying the opening range breakout strategy, where we know the market opens, bang, 2:30 p.m. UK in the US, 8 a.m. UK for the DAX and the FTSE, 1:30 p.m. UK for US initial news. Failing that, we've got 3 p.m. news some days. So, but it suddenly popped into my head then, and I just remembered what it was that I was dreaming about last night. But anyway, some people have different dreams, don't they? Isn't it funny when you're a trader that you only have trading related dreams? Weird. Anyway, I'll leave it there. Before we go into dreams in any more detail, let's just quickly see what the DAX is up to. So still long DAX. Absolutely no way of making money apart from range trading today on the FTSE. So yeah, hopefully this DAX gets a push out. I've got 294 locked in. So the break even on that will be about 2R. So if I can get a 3R on this today, I will make money. So that first trade there is there we go, let's do it there. 347. So that's 342. That is 680 odd. So if we can get there on the DAX, it pays for the loss on the short, and it pays for the hedge, which gets me out a break even on the day. It's the best I can hope for today. Other than that, not a lot we can do. There we go. Right, I'll leave it there. Anything else you want to talk about? Let me know in Discord. Member streams next week. Haven't got anything planned at the moment. People want to do more position trading stuff, so I'm happy to do that, covering different parts of position trading. We did a lot this week on yesterday on the 3 main factors that people struggle with and blow accounts with. I go through theory every day, obviously, in here. But one of the other sessions that I've got potentially planned for that is looking at other alternative entries. And obviously, we know that this EA is something that I've been working on as a manual position trading strategy. So we'll probably do another session on this when I've got the EA up and running and working properly. And then obviously there's other things, other ways we can get in to position trading. Just close it out as well. See, it's really hard not to make money, isn't it? Look. Just obviously because it's range bound. So yeah, there's other ways you can get into the market as well. So there's plenty of ways that we can enter the market with position trading methodology. So we can look at multi-day pushes and all sorts of things. So I'm going to have a session basically looking at alternative ways to enter and alternative indicators. So if you've got any indicators, if you're in the members streams that you think might be good to look at and analyze, I can quickly squeeze those into the existing position trader EA and we can retest them. So yeah, those are the things I've got planned on it really. And next week is last week as well. So I'm off after next week for the Christmas break. Markets tend to slow down. So that'll be end of me until January basically, because it all goes quiet over Christmas. So, or it goes really slippy, one or the other. Either way, you don't really want to be involved. So, all right, so I'll leave it there. Anything you need, let me know in Discord. Other than that, have a good weekend, and I'll be back on Monday, usual time at 8 o'clock, and I will see you then. Have a good day.